you have been trying to pass prop firms. Money in, bust. Money in again, busted again. It's frustrating, I know, I've been there. In this video, I'm going to outline the exact plan of action, not leaving anything on the table. So get your notepads out, put on your thinking cap, and let's finally pass the prop firms. For those that are new here, my name is Nick and I'm a multi-six-figure prop firm funded trader. Thomas, William and I run Callisto. We have no paid course, no mentorship, no overpriced or paid indicators. We have absolutely nothing to sell you. So with that out of the way, let's get right into the video. This is an Asian sweep strategy that I have adapted to my personal style, and let me run you through step by step on how this strategy works. Step 1. We start with the daily time frame. This is where you will identify your buyers, looking for highs and lows to determine if you are in a bullish trend or a bearish trend. Step number 2. Drop down to the 4-hour chart and look for an unmitigated order block that overlaps with a fair value gap. The overlapping PD array makes this level more likely to hold, making the trade a higher probability one. Step number 3. Drop down to the 15-minute time frame to mark out our liquidity or inducement points. The liquidity is identified by a relative equal high or a relative equal low, and inducement points are where price leaves behind a fair value gap, inducing traders to enter the market towards the direction of the fair value gap. As we know, fair value gaps eventually needs to be rebalanced. It's just a matter of when. Therefore, we can use these fair value gaps as potential targets for our intraday scalps. Step number 4. Mark out the Asian session's low and high. This is known as the Asian range. If the range is less than 30 pips, there is a high probability of sweeping the Asian high and Asian low before the expansion move happens. So, I wait for a liquidity sweep during London on the 5-minute or the 15-minute time frame and look for a displacement, which is a fair value gap, away from the area that has been swept. If it leaves behind an order block overlapping this fair value gap, even better. If not, we will enter on the retracement of the fair value gap and place our stop loss covering the swept low or high, targeting the opposing liquidity. Now, onto the trade management. If the trade aligns with the 4-hour and the daily direction, I will then hold the trade for a 1:5 risk to reward ratio. Shift your SL to break even at 1:2 to make sure that you secure some gains, and take 20% partials to let the rest run to a 1:5 risk to reward ratio. If the trade is against higher time frame direction, take full profits at 1:3 risk to reward ratio. Note that if there is no fair value gap, I will stay on the sidelines as there is no indication of any impulse movements. Okay, let's talk about how I adapted this strategy for a trending Asian session. If the Asian session causes price to expand more than 30 pips during the particular session, price is most likely to continue to reverse in the opposite direction during London. So I drop down to the 15-minute time frame and I mark out the order blocks formed during the Asian session. If it breaks the order block, that is the confirmation that it gives me to start looking for entries to ride on the reversal. So I will look for a confirmation on the 5-minute time frame in the form of a break of structure to take a trade, targeting the structural points of the 15-minute time frame. A 1:3 risk to reward ratio is ideal for this scenario. At 1:2 risk to reward ratio, I'll shift my stop loss to break even and take partials. If the trade looks good to run with obvious fair value gap to fill, extend the take profit to 1:5 risk to reward ratio. Now let's take a look at one more example of how my strategy works. Here on the AUD USD chart on the daily time frame, we have ourselves an obvious downtrend. On the 4-hour time frame, the overall structure is bearish as well. We can also identify an unmitigated order block, as seen over here. We mark it out with a rectangle. We hop onto the 15-minute time frame, and what I see here is price looks like it's approaching the order block, so I wait for price to play out. Once price taps into the 4-hour order block, I drop down one more additional time frame to the 5 minutes, and I look for a fair value gap to enter from. And over here, we found a very small fair value gap to enter from, so I place a buy over here with stops below the 5-minute wick low. Coincidentally, this low over here took out the Asia's low as well. However, the Asian high hasn't been taken, so therefore this gives me the trade confluence for the trade to continue running higher and take that liquidity out. After letting the trade run, price never looked back and it ran all the way to a 1:3 risk to reward ratio. Now, I placed the take profit at 1:3 instead of 1:5 as the daily and the 4-hour structure is bearish, making this a counter trend trade. So we take the full profit at 1:3 ratio, securing the bank. That's the entire strategy with examples as I run through the steps. It's finally out. My strategy to help you get funded. If this has helped you in any way, shape or form, smash that like button so it pushes the algorithm to people that wants to get profitable and funded. Lastly, don't forget to subscribe to keep updated with the new content that we post every single week. This is Callisto and I'll see you in the next video.